Hello and welcome to this episode of the Raising Capital podcast and YouTube show. I'm your host, James Tuckerman. Now, if you have not done so yet, make sure that you hit that subscribe button so that you never miss an episode. And if you are listening to this or watching this on your phone, and if you have never given us a review, please take a moment to do just that. You'll be helping other people find this show, and you'll be helping us more than you may ever know. This episode is proudly brought to you by the B2B-Podcast Network. If you are a B2B business owner, B2B-.io helps you automate over 90% of the client journey via one suite online platform. It's a funnel builder, a sales pipeline manager, a CRM, all in one. Get it to get more B2B clients and keep them forever. Now, today, I have as my guest Nati Harpat. Now, Nati has done some incredible things in his time. He was the CEO of Catch when it was just Catch of the Day. He's run a whole bunch of different businesses, including a media company. And fairly recently, he has raised a whopping $28 million from Tiger. Welcome, Nati. I want you to tell me all about your early days with Catch.
Do you know, like the stories about Microsoft and Apple started from the garage? They literally started from the garage because they started selling on eBay, like one of the first ones, and they used the garage to sort of store the stuff and sell it out. They also used to sell in the markets. And so they were, born and bred retail. Their father had a retail store in Melbourne. And so when they sort of were like 18, 19, 20, finishing uni, they started sort of that business. And Rezi has a really good eyes for finding new ideas and new businesses. I'm guessing it's either, I actually never asked them who came up with the idea, but they came up with the idea of Catch of the Day, one product a day. And this is, you're talking about probably what, 14, 15 years ago.
It was a long time ago.
The internet was just started. The internet just started. And so there was not a lot of products offered, especially not at a discounted price. Early on in the online space, it wasn't about like very cheap or price. It was just like this a different experience. So when they had these great, crazy deals, buy a laptop for $500, they would sell out of the stock in an hour.
Yeah.
They told me stories like we would, every day at lunchtime at 12 o'clock, we would have a deal online. Sometimes at 8 o'clock in the morning, we still didn't know what we were going to put at 12 o'clock. They had nothing. They had to drive around to where the wholesalers are, or actually go to a store and just buy in bulk or something, and then just get it up there. So very entrepreneurial, very fast paced, and they built the business. And over the time, as you know, you build a business, you start hiring people, you grow the team. And they had a team and they had CEOs and they got to a point where they felt like the management team was not taking the business to the next stage. It was kind of a bit stuck in revenue, declining profits. By then they raised $80 million from Tiger. Remember that, because that's an important part of the rest of the story. I've been around retail and online for a while. I had my own retail business, which was a retail jewelry chain with about 35 stores that I ran with my wife. I have an online media business that you know about that publishes in the retail space. So I'm familiar with the online space, and I'm a computer guy as well. I mean, I studied software programming, so I kind of got this kind of diverse experience. And I was in touch with Gabby. Both of us have a similar background. We both moved to Australia from Israel. He was very young when he moved in. I was a bit older. And we always talk about business and how you're doing, what's happening. And he was sharing his challenges with me. And I did something interesting back then. So I was running my own media company. I had a partner there. And Gabi was sharing with me all the challenges. And I remember I was flying back from Hong Kong to Sydney. And I just spent like a couple of hours of writing a business plan. And I said, Gabi, here's what I think you should do at Catch of the Day. It was Catch of the Day back then. Fix this, fix that, do this, hire this. This is how you could fix it. And Gabi has, and Chezi as well, they have a very good eye, and they know how to bet on the right horse, they call it. So when they got I thought, I thought this is going to get me a nice, consulting gig, right? Like they're going to invite me. I'll make a bit of money on the side while I'm running my own business. And they invited me to Melbourne, and we spent a day together. And then they said to me, how about we spend a week together working on your plan? And if we like it, we want you to move and to Melbourne, because I was living in Sydney back then. Want you to move to Melbourne and come run the business, or we'll do something together.
So
all on the back of that one email.
What did you do with your jewelry business when you had that?
No, that was after the jewelry business. I was out of the jewelry business. So this is when I was running Optomedia. I was running Inside Retail and all these other publications, which it's a good topic for a podcast on its own right, because I started it with one publication and like a few $100,000 of revenue. By the time I left 2.5 years later, it was 5 publications and millions of dollars of revenue. So it's what I do well is I'm into the growth of businesses. I'm not a good manager, by the way. I'm not like, some might say that I'm okay, but I don't consider myself as a manager, right? So if you say to me, here's a business that does $200 million, can you just run it and get us like 5 or 10% growth every year? There's 2 things might happen. Either I run it to the ground and you'll end up with a $50 million business, or I'll make the $200 million into $1 billion. But I can't stand still because I like to change things and disrupt. So this is my problem.
So let's recap. So we're talking about a mini jewelry empire that moved into media ownership and a bit of consulting, stumbled into Catch of the Day. You became their CEO.
Yeah. So I moved. So I moved within a week. My life from Sydney to Melbourne. I have a wife and 3 children, by the way. It was an opportunity of a lifetime, right? And because it was an opportunity of a lifetime, I couldn't say, it was hard to say no. I had a partner in Optomedia. His name is Oliver Rank. We've known each other for 15 years. I used to have a restaurant in Newtown in Sydney. And I was there one day and Oliver came in. He was working for the Sydney Uni. And we clicked. And then he's been with me for 15 years. Whatever I do is we work together, and I kind of mentored him. And now he's the CMO of Austell, by the way. And I told Oliver, look, I've got this opportunity. Here are the keys. You're going to run the business. And my wife was amazing as well. She, it's not easy to be left by yourself in Sydney, pack up a whole house, take the kids out of school, move to Melbourne. So within a month, my family moved to Melbourne. We started a new life. I mean, moving from Sydney to Melbourne, it's a big change, right? It's not a small change. And so we started up, which made it easy, by the way, when I moved to Cyprus, because I said, look, Sydney, Melbourne, Cyprus, it's like just another move. We got used to being on moving around. Anyway, from here to there, I took over the Catch business, big, massive transformation. I don't know if it's a topic of the podcast. I can tell you a lot about it, but I think you want to talk about money and
I do. I want to talk about capital raising. So already, I mean, your background is fascinating. It sounds like that you've been involved in a whole bunch of different things, but most recently, you've pulled together a wholesale marketplace.
Yep.
Tell us a little bit about that.
So look, I've been in retail in Australia for a while. And jewelry is like a gift store in a way. So been to trade shows, been talking to suppliers. It goes back to something in sort of my nature. I like to see problems and try to solve problems, right? So when I started my jewelry business, I thought I'm smart. I mean, I studied law, technology. I'm a good merchant. But there's so much I didn't know, right? And I made a mistake with my lease, for example. I thought I negotiated a good lease, a good deal, but ended up I did a really bad deal for myself. And so I thought, how come it was 2005 or 4 that we opened that business, 2005? How come there's no online resource for me to find out everything I need to know about negotiating lease, to find a location, do the feed out, like everything I need to know for running a retail business? Back then, there was Inside Retail, but it was Inside Retail Weekly. It was a printed publication. There was nothing online. So I thought, okay, I'm going to start an online publication for retail. And people who want to start a retail business in Australia, they can find everything they need to know. And I started building it whilst having a retail business. One thing led to the other. I merged it with Inside Retail Weekly. And I then worked for Inside Retail for Optomedia for about 2 years. and I digitized their entire business. Same thing happened here. I thought, okay, how is there a world where wholesale is only done offline? That you have to go to a trade show, you have to go to a showroom, you have to wait for a sales rep to come to your store. If you're a small retail, and I'm talking about, I mean, imagine you're a small regional store in a country town in Queensland. This is not easy for you to find good product for your store. You got to travel once or twice a year to a trade show in Sydney or Melbourne. You got to travel to, I mean, most of the wholesalers are based in the capital cities, right? So you're running your own store, you're doing your roster, you're doing your buying, you're doing your accounting, you're doing your standing in the store, you're doing everything. And now you need to travel and find products. And so what happens is you also get ripped off sometimes because you're paying premium prices, because you don't have the ability to do the research and to find and compare products and brands. And one of the things, you know, in a retail store, if you have good products, fresh products, new products, you'll sell well. So I thought this is something we can do to help small businesses. And when I left Catch in April last year, it was right in the middle of the pandemic, right? Yeah. So trade show has been suspended for a while. You couldn't be traveling, definitely not international. And I'm thinking about all these small retail stores, all regional Australia, they must be struggling now. And on the flip side, there's a lot of wholesalers. Yes, you have the massive wholesalers, they have big networks and digital system, etc. But we also have thousands of small wholesalers in Australia, homemakers, brand. You know, there's a guy in Queensland who make chopping boards. There's a person in Byron Bay, they make lollies. How would they find all these small businesses all over Australia and these small retailers that they want to sell their products to? It's expensive, it's hard, it's difficult. So I saw a problem and I thought to solve the problem by putting a platform that is a digital platform. And what it does, it helps the wholesaler and the small makers find customers through our platform. It doesn't cost them anything. We take we take a commission of every transaction, and it's very affordable. And then we help the small business buy as well. And we protect both sides. So the seller gets guaranteed money from us. The buyer gets guaranteed product. They can see reviews. They can see transparency of prices. And we even give them 30 days finance. So if you are a small business store and you need to buy a product and you want to sell it before you start paying for it, they will give you 30 days and we're extending it to 60 days. And that's the story of TradeSquare.
Yeah, so I can just see the conversation that you began to have with other people in your life and your family and investors mid-2020 by pitching the idea that people can't run trade shows anymore. So let's all move this online and launch something called TradeSquare. Now, this is quite a remarkable story because you have raised quite a significant chunk of change in a fairly small amount of time. Now, most recently, you've raised $28 million from Tiger Global. Was that the first capital raise for this particular venture?
No. So, I mean, you can't get to the point where we got before you have some seed money, some really early on money. So I would say I'm fortunate to have really good friends who believe in me and believe in us, because it's not just me, it's Einat, my partner as well. I'll take you a step back because I forgot to mention how, look, businesses, ideas, I have so many ideas. I wake up in the morning and I have 2 new ideas. The problem is execution and building teams. And it will link back to raising money, because ultimately people look at 2 things. You have a good idea and you have a good team that can actually make the idea happen. And so those 2 ingredients are critical. I met Einat through a friend that introduced us, and she's an amazing tech entrepreneur. She's run her own startup before. She knows how to run a team. She knows how to lead a team. And so it was a great marriage between me, who was like a strategy ideas guy, her, who's an amazing entrepreneur, technology leader, and knows how to make things happen. And together we sort of came together and built what is the foundation of the team. Then I brought a lot of people who used to work in different businesses that I was in, and I could bring them into the team. And it's really good when you can bring people from the past into your venture. So we had the idea. I put a bit of money myself just to get.
So this is your partner, and I'm just going to clarify. Einat Sukenik.
Yeah, that's right.
Cool. So, and how did you know? How did you connect with each other?
Well,
how did you meet?
We have a joint friend. Tipi she used to be the CIO of AIG, I think. No, she used to be like very senior in Woolworth Digital and that. So she's very senior in the space. Now she's like a vice president for Miracle. Miracle is a big B2B platform, marketplace. And so when I told Tzipi about my idea and that I'm looking for a CEO who can run this, she said, okay, I've got the perfect person for you.
Cool. So you came together.
Yeah, correct. So we came together, built the idea, started to brainstorm it, started to think about the technology. We're both technology people. So how are we going to build the stack? How are we going to build it scalable? And then I said, okay, now we need the money because we need to build it. We need to hire a team. It's a cash burning machine, this type of business. And I'll explain in a second why. So always the first people I go to would be Gabi and Chezi, right? Like my ex-partners in Catch. We did really well there. And so they're good friends of mine and they're good entrepreneur. And they'll give you the truth in the face. They'll say to you, we like the idea, we don't like the idea. Chezi loved the idea. We were thinking about it for a long time. And so they gave us, so then I did what you call a convertible note, or in the startups, so it's called SAFE.
Oh, great. So it was a SAFE. Interesting.
It was a SAFE. We did a SAFE and we raised I think it was about $1.5 million from friends and family. So it was Gabi and Chezi Leibovich. A good friend of mine is Larry Diamond from Zip. I helped Larry in his early days with Zip, with the retailers and getting the brand out there. It was our ex-chairman for Catch. It was really some CEOs in the retail space, people in my network and friends that either they'll say, look, tell us about the idea. We like the idea. Tell us about the team. We like it. Or they'll say, not if it's you got the money. We know that you're going to find a way about it. So even if we're not 100% sure, we don't know, don't worry about it. Because it's a $100,000 check. So it's fine.
Yeah.
But the problem was we raised $1.5 million from a lot of people. It wasn't like 2 investors, right? It was like, I think it was like about
10, 15. So 100 grand to 150
yeah,
grand.
Some people put a lot more than 10, but some people put even 75 and 50. But it's all friends and family, and we got them all in. And then we needed more money, and we did a second SAFE with another $1 million.
All right.
So all up, we raised
$2.5 million. Let's just stop on the SAFE concept for a second, because people are listening to this because they're often going out and they're raising money for the first time. They haven't run necessarily a bunch of jewelry stores and a restaurant and a media company. And
a horse riding stable. I didn't tell you the whole story.
But a SAFE is a convertible note, and there's not an exchange of equity until usually a Series A moment, which is the trigger point.
Correct.
So when you spoke to people about your SAFE, did you get any pushback on that? People saying, oh, listen, I don't really quite understand this model here and I'm not really getting equity at a later date.
Definitely with people with less sophisticated investors, right? A sophisticated investor understand it. We had to do a lot of explaining. Like we actually had a document that explained what a SAFE is. But the key word in raising money, at least in the seed stage, right, before the A round, where you go to, is trust. You need to have trust with the people you're raising money for.
Yeah. So this is interesting.
If you don't have trust, so when you have trust, a lot of the initial barriers are out of the way. And I can tell you what happens now. I'm getting a lot of people approaching me, asking me if I can help them raise money because they're new, they don't in the space, they don't have the trust and that's a challenge. And now for me, it's also an issue to raise money for other people because when I ask money for my business, they trust me. It means I'm on the tools, I'm working, I'm building it. I can't do this for other people because I can't ask people to trust me to put their money somewhere else if I'm not involved in that business and being able to make it work. Because you can't transfer trust, if you know what I mean.
No.
So it's really important that your first initial money, that first of all, that you build trust with people around you for a period of time, that you've done something, even if you work in a place, but you build a good reputation, you've done the right thing, you haven't burned people behind you, you haven't done the wrong thing, so that when the point in time comes that you need to raise money, people will trust you.
So when you went out to raise this first 1.5 million and then later a second million, you said that you and Enat had sat down, you'd worked out the stack, you'd worked out how you're going to scale this thing. There's obviously a lot of trust in you. What else did you need to arm yourself with? You obviously needed the safe documentation, which is the legal piece.
You needed, so I needed to put so I put a team together, right? So it's not to just two people. I had a head of marketplace who had experience in marketplace and worked with me in the past. I had a marketing manager who worked in my previous business. I had a CTO. So I had to present a whole team. I had to present a whole strategy. I had to present the research about the market. So we had a really nice presentation that was professionally done. And then when I went to investors and I took them through it, they asked a lot of questions, but the initial raising $50,000 to $100,000 from people who have money and willing to take the risk is not a challenge. The challenge is you have to do it 10 or 15 times. You probably need to talk to 30 or 40 people to get 10 or 15 to say yes. So it's a lot of work. It's a lot of hard work. So I hope next time I'm not going to have to do 10 or 15.
Well, I've done a couple interviews lately with people that have raised money, and they've had to speak to a lot more people than 30 to raise their money. But if I'm going to break this down for the folks at home, there's a couple ingredients here. And indeed, Natty's given us 5. He said a good idea, a good team, legals, pitch deck, and trust. And the interesting thing is that last one has obviously come from existing and personal relationships, but trust can also be brought to the table from a good idea, a good team, legals, and the pitch deck, which would have had a whole lot of data and a whole lot of.
Well, actually, there's another aspect to the trust. If you wanted to
hit me,
if you want to add to that. So I built an advisory board as well, and if you don't, and like, you get to a point where maybe you don't need it anymore. But if you're a starting person, and you don't have that, you can bring people around you who could help you to get the trust, right? So I had 4 or 5 people on my advisory board. I actually went for people from the industry or people who understand the space, marketplaces, small businesses, wholesale, retail, branding. I went to that type of advisory board. But the alternative you can do is that if you're going to raise money and you don't, let's say you're a first-time entrepreneur, right? Like you worked in a corporate, you got a good experience, but now you want to do your own startup, and your partner might be a technology person, but he's not a known entrepreneur. You can go and find people either in a network outside who actually have the reputation that they've done something that they know. So when you go and present, you say, okay, but look, Paul Greenberg or Gabi Leibovich or Nati Arpaz or Larry Diamond, they're on my advisory board. They're supporting me. They believe in me. They're going to give me money, and they're also giving me advice, and they're sitting on my advisory board. So that is another way to get the trust with investors. To say, okay, so if these guys are with you, that means you're probably onto something.
So with those people, I remember when I started out Anthill Magazine, I raised a little bit of money. And one of the things that I first did was I like you formed an advisory board. Fortunately, I was about 25, 26, and a lot of people that I knew just wanted to join my advisory board to help me. They wanted to pay it back to the next generation of entrepreneurs. As you get older, that's less likely. How do you go about, I don't know, incentivizing the advisory board members, or once again, is this just part of that, the networks that you already have? Or were there formal incentives?
Well, it depends. It depends. You can. You're all of the above. I mean, in some you do equity, and you say, "Look, come into my advisory board and help me," because you expect them to help you as well.
Yeah.
Open doors, find me suppliers, help me, introduce me to VCs, right? Introduce me to capital. Do you have any friends who might be interested in investing? And you reward them for that with, okay, I mean, you have an ESOP. And you have the equity, and you say to them, look, we're going to give you equity because you're like part of the initial stage. You're part of the founding. You can reward them with on a time basis or on a general basis. But yeah, you definitely have to give them something, even if they don't ask for it. I mean, even if they want to pay it back, it's still. I mean, I'll give you an interesting fact. A lot of people looked at me and said, "How did this happen?" I gave, before I even started raising $1. I gave 60%, around 60% of the equity in the business out on day one. So between my partner and all the team that I've hired, which is ex-employees of mine in other businesses, I gave out 60% of the equity because, I mean, my partner is my partner. So she's got the lion's share. And then I've got the head of marketplace, the CMO, the COO, the tech guy, the advisory board, the BDMs, everyone. I couldn't pay them high salaries in the beginning. Some of them didn't even get a salary for a few months. So the way I rewarded them was with equity. And now I've got everyone in the business is a partner. Everyone has equity. We don't have hardly anyone. So I don't care about, even if this business was $1 billion, if I end up with 15% of $1 billion or 20% of it really makes no difference to your life.
Yeah.
It makes a lot more difference. Yeah.
Everyone needs to listen to what Nati just said. All right. So we have lots of entrepreneurs out there. They want to raise some money and they're like, oh, I don't want to give too much away. I don't want to dilute. Now, if you end up with 40% of a business that's worth only $300,000, that's a problem. But Nati's out here and he wants to, I'm sure it's in your pitch deck, but you've probably got a vision to create a $100 million valuation within like 5 to 10 years. And it's probably got the potential to become $1 billion valuation type business. And if you ultimately end up owning 10, 20%.
I'll just stop you there because Tiger would not be investing in a business that will be worth $100 million in 5 years. In 5 years, it needs to be $1 billion or that $2 billion for them to even get interested in a business like that.
See, there you go. So a lot of people are like, oh yeah, I'm worried about how much equity I'm going to give up. Now, if Nati ends up owning 10 to 20% of $1 billion valuation business, he's going to be pretty happy around that.
But it goes to it goes back to my philosophy. It's all about people, right? There's nothing else. It's not about the idea or the technology. It's about the people because, there's a saying, culture beats strategy. And the reality is, if you have a good team that's loyal, that's hardworking, that's smart, that's trying to find solution and not excuses, that care about making things happen, they'll find the solution to the problem. They'll get the right culture. They'll make sure that if there's a problem with the technology, they'll solve it and they'll get around it. And so that's why it's important to make everyone a partner and give them equity. And first of all, you want to share the love and you want to share the success and the failures, right? I like people with skin in the game. I don't like to pay huge salaries so people just do a 9 to 5 and become fat and lazy. I like them to be hungry. I like them to work because they're going to make money from an exit event, not because they're going to sit on a salary. And that's a philosophy, and that's how I operate. That's why they got all this equity.
In our business, we have a saying which we stole from the great Jim Collins book, Good to Great, where it's about having the right people on the bus. You don't want people that are just going to sit there and keep a seat warm. You want people that are going to challenge you and look for new opportunities and different ways to steer things. Now, we haven't really got to what a lot of people will probably want to know, and they might find this the most interesting part of the story, because we're talking about a very short time frame. This is not even 12 months yet since you went out there and started to market this idea. 2020. Sorry, I'm getting the years wrong.
But look, the idea came up in
it was April 2020, I think, wasn't it?
April 2020, correct?
Yeah. My brain.
And then we started, but we needed to build it, right? So then we went with a very basic MVP in September, right? Then we started to ramp up marketing a little bit in January, February, right? And then it started to grow from there. And so, you could say that we're live about a year as a website online with a bit of marketing. But again, we didn't have a lot of money for marketing. And so it is quite... So if you want me to tell, do you want me to tell the story about
what I was trying to get to is the next piece in the puzzle of the capital raise story. And that's the most recent announcement. That's when you raised $28 million from Tiger, which you seem to have a connection with in the past. But I would love to hear how that all came about. You raised 1.5, you raised another one, and then here we are. Would you call this a Series A? Is that the way?
Yeah, that's a Series A. This is Series A. This is also when the safe materializes and converts into shares.
Yeah.
Now, the interesting thing here is we didn't go out to raise $28 million. We went out to raise a little bit less. We didn't expect to raise this kind of money. And we spoke to a lot of VCs. Everyone showed interest, but everyone said, rightly so, guys, it's a bit early for us. You guys are growing nicely. You got nice numbers, but it's not big enough or strong enough for a VC to come in and we don't write $5 million checks, right? We write 10 or 20. And this is a lot of the feedback we got. When we got to Tiger, I have to say, look, in business, you need to be in the right place at the right time and a bit of luck. So Tiger invested in a similar business to TradeSquare in Europe called EncoStore. And they missed out on another one in the US called Fair, which they wanted to invest, but they didn't end up investing. So they knew the space very well. We didn't need to tell them, educate them about the disruption or the market. They said, okay, we got it, we understand it. Okay, now, they said, now that we know that you guys are in this space and we love the space and we know the space and we think it's the future, now we want to work out, do you have the right team? And what feedback you got in the market? So the team, again, was an easier hurdle to cross because I built myself a bit of a reputation of a guy who gets things done and a good entrepreneur, and they knew me from the Catch days. And so that was an easy one. Again, trust, reputation, etc. So I got that. And then they went out and spoke to our customers and spoke to our suppliers and to get some feedback. And so with Tiger, that stage was passed quite easily because we hit all the right KPIs, if you want to call it that way, right? In the right market, in the right time, we're getting growth, good feedback, good team. So we ticked all those boxes. Then it got to the point around the money and the valuation. And for Tiger, they're such a massive VC. They don't do small investments like $5 or $10 million. They do minimum 20. And even that is very small. And I'm talking about 20 US dollars, which equals 28 million Australian. And that was the challenge with Tiger. And so even though we were out to raise 10 or 15, they forced us to take 28 and said, look, if you want us, this is and it does mean a higher dilution for us. But at the end of the day, with this kind of money, we can grow faster and do a lot more. And we don't have to raise money after 12 months. This money will probably last us a bit longer than that. And so that's the story with Tiger. I wouldn't take that as a case study, by the way, for anyone to go and raise money in a similar way. I mean, don't count on it, put it that way. It was a lot of stars aligning for that to happen that way. We had 30 conversations with VCs before we got there. A lot of VCs in the US and a few VCs in Australia. Again, different mentality, different way of looking things. That's another thing for you to consider. Where does the money going to come from? What business do you need to have to be able to raise money? But again, you need to be also in the right industry. If you look at what happened recently with those, with Milk Run as well, like that's another stunning story.
Yeah, well, I think that the lesson for most people here is that a lot of people try and raise money without being particularly strategic about it. Now, in this particular situation, you ended up speaking to a fund that had already recently invested in a similar type of business. And the lesson, I think, is that a lot of people go out there and they try and speak to funds that have no interest in what it is that they're doing. Now, you're very lucky because this person had a very high level of interest in exactly what it is that you're doing. So it seems like you are lucky. And I'm sure that, luck is something that we make. But for other people going out there raising money, it can really help if you can try and isolate the firms and the funds that are specifically interested in what it is that you've got going on.
I mean, we did look at who are the investors in those same platforms in Europe and the US. And we went after them as well because we knew they know the industry. Yeah. Then after that, we looked at investors in the marketplace and e-commerce space, right?
Yeah.
Because there's companies who invest in software. We're not a software company, right? We're a platform. We're a marketplace. It's a very different proposition being a marketplace versus being a software company. We're more of a commerce platform, a merchant platform. And so there's no point talking to VCs that are looking for SaaS or looking for software if that's not what you do.
And the valuations are very different too. So you get a completely different experience.
Yeah. So, I mean, that's the one. It's quite difficult to raise money in the US for Aussie businesses, by the way. I think what we need in Australia, look, if I look at Israel, for example, right? It's half an hour flight from where I am. They're raising billions of dollars it's probably the second place in the world after Silicon Valley for raising money and for startup companies. And the reason is that area built a reputation of lots of very good companies that are not focused on the local market, because the market is very small there. It's focused globally. But right now in Australia, we don't have a lot of companies that target the global market. We have Atlassian is a great example, but we don't have a lot of international big success stories and platforms. So it means that when you go and talk to VC in the US as an Aussie business, they look at you as an Australian business. They don't look at you, okay, this is going to become a global business. And so they're not interested. I mean, if you're in the US market or Europe, okay, it's big enough in its own right. If you're an Aussie business, there's no point talking to VCs in the US unless your business is planning to be a global business or you have a global business model. So you'll save yourself a lot of trouble if you make sure that you're pitching the right thing to the right business. If you're an Aussie platform thinking about an Aussie business, then you should focus on the local market, the local investors in Australia. And there's not that many of them. And in some cases, there's some really good ones, but in a lot of cases, they could be quite conservative, right?
Yeah, looking for a lot more revenue. Well, I have one more question for you, and that was the question of traction. So you mentioned that you'd had growth. So you raised some money, you built the team, you launched the platform, you had some growth, you went out for Series A, you're thinking, we want to raise 5 million so we don't dilute it so much, but you end up raising 28 million. What was the story that you were able to tell around this idea of traction, which seems to be a prerequisite to get your Series A these days?
No, we were tracking 30% month-on-month growth for 6 months.
Yeah, wow.
So it could start with low numbers, but if you're tracking 20 or 30% every month, that very quickly becomes big numbers. And you know when you look at the graph, you got what we call the hockey stick,
the
right?
J curve.
Inflection point. Yeah, the inflection point where all of a sudden it starts. Now, I actually don't think we're there yet. I think we're still a bit away from it, but we're starting to get the beginning of that sort of that J curve. And once you're in the J curve, once you're at the top there, then you're expensive and it's a bit late. I mean, then you ask for big money. We're in the beginning of that sort of the J curve, but you're starting to see 20%. And I think in this case, this VC fund specifically, said it's a small check for us, I guess. $20 million is a small money for a billion dollar fund. We know the team, we like the model. You need the money now. We know that if we give you the money, you can accelerate your growth faster. So we'll bet on you. And so they came it early in the thing, but also for them, the benefit is they could buy a big chunk out of the business. And if they waited another year, we could have, let's say we raised $5 million. In a year's time, they could have given us the $20 million, but then they'll get half the equity they got. So for them, it's getting a minimum stake in the business. And the beauty about this specific case is if we execute well, then the next investment will probably come from them again. Well, they'll probably come, okay, well, how much do you need now? Here's the money.
So that's my final question. I mean, like, how much of your time has this taken up as a percentage while you're growing the business? And
you mean the money raising?
Yeah. And are you going to play this moving forward? Is this just going to be part of your job that you just need to allocate a certain percentage of your time to?
First, you got to think about the fact that if you want to raise money, start at least 6 months before you're going to run out of money or you need the money, maybe longer, because the due diligence itself and the legal, especially with big VC funds, could take 3 months or 4 months. Even if they try to do it fast, and Tiger is like the fastest, he's still dealing with lawyers and he's still dealing with due diligence and all that stuff. So that takes time. Don't put yourself in a position that you might run out of money. So that's part one. The second thing is it takes a lot of time. What I try to do is I try to take a lot of it on myself so that the CEO can focus on running the business and doesn't get distracted. But I can tell you that, I'm not saying out of the time that I'm allocating for TradeSquare, it probably took 50% of my time with dealing with raising money.
So I'm just going to recap some standout things for me. Good idea and good team. What a great combination. Now, TradeSquare, you can pitch it in a sentence or two, and the way that the world was changing really popped out as an obvious idea. It also, I found it interesting that you used the SAFE model, which I'd barely heard of a couple of years ago. I think Y Combinator has been pushing it. Now everybody knows what it is. And it stands for those who are interested, it stands for a simple agreement for future equity. Is that right? Simple agreement for future equity.
Yep.
That's the SAFE note. Another standout for me is the amount of equity that you gave up just to bring on the right team, to bring on the right people. And of course, and I thought that this was fantastic, pulling together an advisory board. Another acronym that came out of that was ESOPs, which stands for Employee Stock Ownership Plan, which is something that Natty obviously has in place to make sure that everybody is adequately rewarded. And finally, any final words of advice for Australians out there that are wanting to raise capital at this time?
Look, I think that there's a lot of equity out there looking for good investments. Make sure you don't, when you come across, this is like a sales, you have to be a good salesperson, unfortunately, if you're trying to raise money, right? If you're not, find someone who can help you with that, or find a partner, right? But what it means, you have to be very clear about your business, about what you set out to do, about how you're going to achieve that, and how the investors can trust you for doing everything you can to achieve it. And if you don't, and if you sound like a sleazy sales guy, people will smell that. Like, we human beings have the ability, it's like a sixth sense. We can feel things underneath the words that are being said. So you have to have a high level of integrity, and you have to have a high level of transparency. So people look at you and think, I trust this guy. And it's a subconscious feeling, right? And so, make sure that if you don't have those skills, or there's that ability, then find someone who can help you with that, because not everyone is good at raising money, put it that way. Sometimes you need some help. So get the help if you need it.
So there's that fantastic word again, which is a great final tip. And that is trust. Yep. Thank you, Natty, for your time.
No problem. Thanks, mate.